So it's day 37 of the Bitcoin daily dollar cost average project that I'm doing. So anyways, I'll get right into it. Again, it's a boring routine, but this is how you do it. And again, this is not financial advice. So you take the DAI coin, which is the stable coin where all the money is, essentially like a bank account. And I committed to $333 every day into Bitcoin from the stable coin. Here's the conversion. I will be getting 0.00428553 Bitcoin. Okay, so there you go. And just take a quick look at the portfolio. So yeah, I have just under 20% of a Bitcoin. So we're moving forward here. So again, Chainlink, what's Chainlink doing? I have a little bit of an overview. It's up 3.49%. We'll go take a look at Cosmos. They're up 2%. They were up quite a bit yesterday. I think I think it was Algorand was up almost 10%. Yeah, they're up 4.2%. So anyways, that's what's going on with that portfolio. Again, it looks like it's really pumping along. It's doing really well. If you look at Bitcoin itself, like the price, the weekly chart, like it's just, look at that. Like a week ago it was 63. Now it's 76. $13,000 in 1 week. Like that's crazy, man. Like that's just insane. But anyway, so that's what you have. Okay, I just want to see some YouTube videos here. Okay, so this Lark Davis is saying Bitcoin bull market only just beginning. Bitcoin price prediction. He's saying 200 grand in 2021. Michael Saylor is saying 5 million per Bitcoin is inevitable. It's just getting started. So again, is he right? Is he wrong? I have no idea. This is what he's saying. That would be a pretty good one. And then we got our friend Cryptos R Us saying that the altcoins will pump after Bitcoin. So there'll be a big pump in the altcoin. And that's pretty much a trend that as soon as Bitcoin pumps, the alts pump after that, which, I'm positioned for anyways. So now we got one institutional Bitcoin payments and hedge fund, but they will dump it. Okay, so I wouldn't mind watching this one. And then you got another Bitcoin Ethereum pump coming today. So this guy's saying it's going to pump today. Anyways, so I think we should watch this one because this guy's actually pretty credible. I've seen him speak before. He seems to have a cool head and he's very logical. He's not, one of those hype people. Like he's not just talking, to entice people to buy so he can, he can peddle clickbait. He's not really like that. He's just logical, this guy. So I'll listen to what Digital Asset News has to say. And then I'll do a quick analysis like I usually do. But like I said before, I'm just going by the headlines here. So if he's saying institutional Bitcoin payment and hedge fund, but they'll dump it. I hope they dump it, and then that's where you get the opportunity. But it might be they permanently dump it. Like, because the other thing you have to look at too, with all this fear of inflation, like we were watching that video, I think it was yesterday, the day before, and it was saying that the Fed, what the strategy is that they're going to try to push for hyperinflation, and it's going to be their way to get themselves out of this problem. So it gets kind of complicated on why, but you got to remember, inflation is essentially a tax. It's a tax on what things cost, right? So if you're used to paying $10 for something, now it's $100. You just lost $90 worth of purchasing power, right? Because of the economy itself kind of sucks it in. So what that one analyst was saying yesterday was that they're going to try to, because the Fed and all those central banks around the world, they had this idea to keep inflation in check around 2%, and they're going over that. You might say, well, it's only 2.6 or whatever. Just that extra 0.6 makes a huge difference, right? And you got to remember that CPI index, as far as a barometer of inflation, that thing's not accurate because, number one, it does not take in consideration housing prices. If you take in consideration housing prices, just look around you. We are definitely in a hyperinflationary rate. Okay, so I'll give you an example of how governments can make money off inflation. Okay, now I don't know about where you live because I don't know where you live, but I know I live in Ontario, Canada. Okay, around the Toronto area, and I remember years and years ago. Is it a master plan? I don't know. Like, have they been planning this for years? I don't know. I'm not going to get into a conspiracy theory, but I do know for a fact, because even when I was a kid, my ears used to perk up, when it came to things about economy and money. I don't know. I've just always been interested in that. Even when I was like 11, 12 years old, I don't know why. I just liked it. Like, I didn't care about sports or movies, or I didn't really watch movies and watch sports, but for some reason I love the economy and I love like business and finance. And anytime somebody talked about that, I would always listen to what they were saying. And I remember years and years and years ago, I wasn't a little kid at the time, but I mean, this was probably over 20 years ago. The Ontario government, and I don't know if the rest of Canada did it, but I know Ontario did it, was they changed your property tax. They used to just have a set amount and it would go up, every so often, maybe 4 or 5 years. But then they changed it to a percentage of your housing price. Okay. So it went from, because I remember people were complaining because there were some people, for instance, where I lived, excuse me, there was these huge mansions, massive mansions, but they were built in the 20s or 30s or something like that in Lakeshore, Burlington. And they'd be, I guess today they'd be an $8 million house. They're huge. They're for, mega rich people. And somebody found out that these guys were only paying $2,500 a year in property tax. And then somebody in a new subdivision was paying $3,500 property tax. And there was a big, backlash about that because, and I'm not saying this was the only reason why the whole province changed it, but I'm saying there was this sort of thing that because, contingent on when your house was built, they would start a annual property tax rate, and then it would just continue from there. So if you bought it again 80 years ago, it's probably way cheaper than if you had one built today. So, but anyway, so the government passed this thing that your property tax will be based on a percentage of your current market value, but they only reassess your house maybe every 5 years. So a lot of people right now who are living in a house that's over $1 million, they're probably paying property tax on $600,000-$700,000 because that's what their house was the last time it was assessed. But they're going to get a huge kick, when it gets reassessed, because I think they do it every 5 years. So this is the problem: is if everyone, oh yeah, my house is going up, yeah, but your property tax is going up, right? So this is a way that governments can get money via inflation. So if your main source of wealth is your house, and the current market price is triple of what it was last year, well, guess what? They're getting a higher percentage of taxation from you. That's how they do it, right? And they're not going to go on TV and tell you, okay, this is why we want to see a hyperinflationary rate, but this is essentially it. And this is just one way. There's other ways too, but and they're going to get it through, again, on sales tax. If you were paying $1 for a pack of gum, now it's $4, and the sales tax is 13%. They just made 4 times on taxation. They're making about as much as the whole gum used to cost a couple years ago. That's how they get you, is when something's a percentage of the price, via property taxes, sales taxes. You'll see it on gas, because gas gets taxed by a percentage, so on and so forth. That's how they get their money back, right? So you might say, well, yeah, the government's trying to help people. They're giving you a stimulus check. They're doing this. They're making money through the back door via a percentage increase of, your purchasing power. That's how they're going to get all this money back. And the worst part is, they're the idiots that caused the problem. Now they're suckering everybody into it. But anyway, so that's just, one little take on it. But we're going to watch this digital asset news segment on institutional Bitcoin, and we'll just hear what he has to say.
$1,000.
Welcome to Digital Asset News, the top stories in cryptocurrency and digital assets, and breaking down into bite-sized pieces. Really today, we've got one story, and that's this. Goldman Sachs senior exec on huge institutional demand for Bitcoin. And what this article allows us to do is to peel back the curtain and see not just what institutions are doing, but corporations, hedge funds, treasuries, and pensions are thinking about Bitcoin, and how bullish it is, because they're actually talking about using Bitcoin for payments as opposed to a store of value. So we're going to dig deep into this one, and we're going to try to talk about what this potentially all could mean for when the impending bear market comes about. So we'll take a look at this, but first let's take a look at what's going on into the market. So right now it is March 13th, 5 p.m. Houston, Texas time. I'm with my guy Chewy here, and we're still in Houston because we have this investment property, and there's just some problems that are coming up, so we need to make sure this is ready, as we have all these people coming in through Airbnb to rent it out. And it's been pretty good. We came here just about a week and a half ago or so. We got everything fixed up and ready to go, put an Airbnb, and now here we are. I think we're almost 3 months booked for people to come in. So that's what's great. Not really having a job. Well, I have no job. I mean, me and my wife just work for ourselves, and we get to do things like this. So this is always good news. So let's take a look at what's going on. So if you haven't known, Bitcoin just popped over 60,000. So congratulations to all the Bitcoin holders. Every single Bitcoin holder today is in profit. So congratulations to everybody. That is a pretty great thing. Also on top of that, let's see, Ethereum's up 9%, Binance Coin. It just seems like when Bitcoin goes up, everything else goes up, and that's just pretty much how it works. So if you're new to cryptocurrency, just remember that little sage advice. Bitcoin goes up, usually a lot of things go up, especially when we're hitting all-time highs. Let's see, XRP 6.27 for Polkadot. Anything fantastic besides Bitcoin? 15% for EOS. Wow, that's crazy. 19% for Bitcoin SV. All right, sure. 3%, 9% for FTX token. 21% for SushiSwap. Huh, interesting. And then some more stuff, Filecoin 11%, and so on and so forth. So let's just take a look real quick. Actually, let me blow this up so you can see what I'm talking about. Let's take a look at the sentiment score through Trade the Chain and see what's going to be the next ones. This always just gets me into my inner trader. So take a look at Next, Genesis Vision, OneChain, Emera, and Utrust. Those looks like they're Decentraland, PundiX, Pundi, and Ethereum Classic. So this part right here, see this little middle number here for Next, 4.2% to 13%. That's like 90% accuracy for Trade the Chain. Also on top of that, just so you know, talking about institutions, I'll be on the Alex Mascioli show on Tuesday. Alex is my main guy, my inner pipeline for all the different institution gossip or things that are going on. And those guys, we're talking about their personal portfolios. So I'll just be there for I don't know, comic relief or something. So we'll see how it all works out. I'll share the link later on. All right, let's get into today's top story, shall we? And here we are. And Chewy's gone because he's lazy. All right. So what is this all about? Well, this one is important to me. It's interesting to me, I should say, because of a conversation that me and Alex Mascioli were having. which was he believes that the reason why Bitcoin and crypto really popped off was because of the coronavirus, and I believe that too. He thinks that the reason was because everybody was at home and nothing to do, so they did a lot of research, and of course this was the time of the halvening, so they figured out about that. They probably figured out some things about cycles. They probably looked at what it could actually do. They did some deep dives, and they figured out just how great crypto and digital assets could be. But he thinks that once we start to get the vaccines, people start to do more things by themselves. They're actually able to travel and do other things. He says that he thinks that crypto will actually drop off because people won't be as interested into it because they'll have other interests. And that's the part where we diverge. I personally believe that because everybody has been very, educating themselves, now they can have a more informed conversation just about Bitcoin, for example, and just say, hey, Bitcoin is gold 2.0. It's you can transfer it or spend it or send it anywhere in the world to anyone in the world in less than 30 minutes. It used to cost a nickel, and now it costs 50,000, actually 60,000 as of today. It is it's the best performing asset over the last 10 years. That's why I'm heavily invested into it. That is my Bitcoin elevator pitch. So if you've been to danteacherscrypto.com, you know exactly what I'm talking about. So when people start to hear about that, like, oh, well, tell me more. How much was it a year ago? Wow, 5,000. Now it's at 60,000. Wow. Tell me why it is so great. Well, decentralization, and of course, because of what's going on with the money printing, and they can go down that rabbit hole. But I truly believe that now that people are educated, they're able to go and intermingle with all the people that they know. Maybe their jobs are more on site. Maybe they get together more with friends and family, and they start to talk about these things in person. And I think that is actually going to lead to a bigger influx of crypto users and digital asset investors. And then, of course, that's why I created this website, danteacherscrypto.com, because it goes over some basics and a little intermediate stuff, but it's 100% free. And when people go there and they learn about it, the only thing I ask is that you tell two people.
Okay, I think what he says here makes a lot of sense about the whole coronavirus, spawning the craze, if you will, for Bitcoin. And I believe that. You had nothing else to do. You're sitting around, it's in the news. People read about it, with YouTube, they watch videos, yada, yada, yada. Oh, this thing's great, so on and so forth. It got pumped. But I think what he was saying was the person he was speaking to said after the virus, it's probably going to go down. And then he's saying, well, actually it might go up because now people, it's kind of in their consciousness now. And they're going to go around telling people about it. There's that point too. That's actually a really hard call. And I do think that is going to be a major deciding factor of which way it's going to go. Is like, how do people react once, the pandemic fear is over? Are they just going to go back to their ways and buy mutual funds and, so on and so forth? Or have they been converted to Bitcoin and they're just going to stick with it? Who knows? That's a very interesting point, and I do think that there's a lot of credibility to that. So I don't know. Like I do think people, again, they're like creatures of habit. If they do like something and they've kind of integrated into their overall way of thinking, they usually stick with it. A lot of times people do things they don't even know why they're doing it. Like people will say to you, oh yeah, I put, $500 a month away into this particular mutual fund, yada, yada, yada. You'll say, oh, how is it doing? I don't know. I don't look at it. It's out of habit. So if somebody was buying Bitcoin and they put in, $500 a month into Bitcoin and, they're busy doing other stuff, they probably just keep doing it. I would imagine. I don't know for sure. Like, not everybody is like totally into their investments. Like, there's so many people that are like, artists and stuff that are totally into what they're doing. Like, like they're a musician or their music is their main thing, or people that are like, lawyers and stuff. Like, they're into their practice. And yeah, they invest on the side, but they're not like glued to the computer watching price movements every 5 seconds, right? So maybe they convert it over to being a Bitcoin bull and they just will continue on and that's the end of it. It's hard. That is a very difficult call. I'm not really sure how that's going to play out. But anyways, I just wanted to share this with everybody just to see, what's going on in the world of crypto and just looking at different people's point of view. And this is exactly the type of information I'm looking for is how are major world events going to, influence other events? Like how does cryptocurrency get influenced by the pandemic and vice versa? Like it's these sorts of things. That's how those macroeconomists think, how major world events affect other things. So anyways, that's again, I'm not trying to say this is like a big round table economic, thing, but it's just to get, your creativity flowing and trying to look at things from a different point of view. And although I do to a certain degree believe in, technical analysis, I think just looking at charts all day long, it's, you know what I mean? You have to know why those things are moving. It's like saying when you're driving a car and you see your speedometer going down, the fact that needle is going down doesn't make your car go slower. It's like if you're doing everything normal and your foot's on the pedal and you're losing speed, it's probably because you have an engine problem. There's something wrong with, maybe the fuel injector or something. Like the needle is just an indicator of what's going on. It's not the reason why you're losing speed, sort of thing. So like those charts are just basically, they're just barometers of what's going on. So like, again, because the economy is so complex, maybe when it starts going down, it's because and again, hypothetically saying, maybe it's because people are going back to work and they're forgetting about crypto because they're not at home watching it anymore. It could be that, or maybe like this guy here said, is that once people start commingling with people, you got all these basically salespeople out pitching it to everyone. Oh, you're not in crypto? Oh, while we were off, during the pandemic, I put in, 20 grand. I got 300,000. Really? Why? And then they give their pitch. Maybe they might entice more people that wouldn't have been into it, right? You don't know. Like that is a very interesting point. And, it remains to be seen. But these are the types of things I like hearing, because like all these guys that hype it up, like this guy's not talking all, hyper or anything. He's just saying, look, this is the way it is. Makes a very valid point, and then he discusses it. He shows you, one side of the argument, then the other side of the argument, and that's exactly what you want to be, like a very rational, cool-headed person, right? These guys who just hype it up all the time, whatever. It's just, I don't know. To me, it's kind of exhausting listening to that. But anyways, that's it for today, and I'll see you tomorrow. Take care.